Good day, traders. Hope you guys are good and welcome to my learning space. As you've seen by the title of the video, today we're going to be talking about the market maker cycles, particularly the weekly cycle. And this is actually a continuation from a video that I uploaded on the 24-hour market maker cycle. So if you haven't checked out that video, the link to that video will be made available in the description box below, or you can click on the top right corner of your screen. Before we can get into today's topic, there's a few things that I need you guys to understand. Number one is that the market is mainly run by market makers. Most of the price action that you see on your chart right now, or most of the transactions that you see on your ledgers, if you have access to that kind of information, are results of orders filled in by market makers. That's point number one. Point number two, market makers get their liquidity from retail traders. So in essence, market makers are always trading against retail traders, right? And this isn't entirely a bad thing. This isn't a conspiracy, number one. Number two, it's not entirely bad, right? Now, there's videos where I specifically talk about how market makers work, but what you need to understand for now is that we need market makers in order for us to execute our positions. Now, the reason why I mentioned that is because they have a tendency of creating fake movements in order to lure retail traders to take trades or positions out of panic or fear, and then taking liquidity from retail traders and moving in an opposite direction. There's an entire playlist of videos where I talked about this in detail, right? But then that's what happens. And so this also happens within the weekly cycles. There are days specifically dedicated towards taking liquidity from retail traders. And then there's days where you will see the true trend of that week. Let me start by writing down the objectives of market makers, and then we'll move towards the phases of the market cycle in a week. And then we'll move to the live chart so that I can demonstrate this, right? So this is the objective of market makers noted down. Hopefully you are taking notes. We'll get into the typical bearish weekly candlestick. As we all know, the market opens Sunday, Monday, depending on where you are in the world, and it closes on Friday. So what normally happens, this does not happen back to back or every week, but on an ideal week, what happens is the market opens, and in the beginning of the week, you have this fake movement or this fake trend. So a lot of retail traders will interpret that fake trend in this context as an uptrend, right? Now, there's an area where the market is market makers are gonna grab liquidity, right? After grabbing liquidity and going into direction where they have their orders or limit orders resting, after those limit orders have been taken out, see a big movement against that initial trend of that week. This usually happens Thursday, Friday, where we have that huge reversal. And then after that big movement, you'll get a consolidation. And then this is usually where the market closes on a Friday, right? This is the textbook type of template. And we'll be talking about these phases in a minute, right? But then this is the main idea behind the weekly market cycle. As you have noticed, there are similarities between the weekly market cycle and the daily cycle. There are similarities in the sense that there's an induction phase, and then there's a manipulation phase, and then there's a strong movement, and then the market ends in a consolidation. Right. So, like I said, the phases of the week or the phases of the market during the week, you have your induction phase, right? You have a stop hunt, right? Which usually happens during the midweek reversal. And then you have the true trend of the week, which occurs after that midweek reversal. And then you have the market ending in consolidation, and that consolidation overlapping into the next week, which is Monday, right? So that consolidation usually lasts from Friday to Monday. So these are the phases of the week. Now I want us to discuss the areas of liquidity, right? This is the areas where you're going to find the most liquidity, usually at the highs and lows of the week, the highs and lows of the day, right? So just to recap, usually the market opens, right? from Friday's consolidation. After that consolidation, you get a false movement, right? A grab of liquidity in either one of these areas, a strong movement, and this is the true trend of the week, and then the market will close again in consolidation, right? Hope you guys have taken notes. Let's move on to the live chart. So as you can see right here, these aren't necessarily perfect setups, but with back testing and as time goes, your eye will be trained for you to be able to see these setups. Just want to change this color. But anyways, this was the high of the week of the previous week. And I did mention that it's an area of potential liquidity. You had this week, you had this consolidation coming into the new week, right? And then Monday, Tuesday, Wednesday, you had this false trend. And then after liquidity grab from yesterday's low, you had the strong push to the upside, right, of which we closed here as a low of the day. And then you had this movement the next day, and then the market continued up again. Obviously, you need to use confirmations from a higher time frame, which is the 1 hour, and also incorporate it with the strategy that you're using already. Most of the time, support and resistance alone won't cut it. So I'd suggest that if you're not familiar with smart money trading, you check out my playlist that I already recorded on smart money. Check out my video on manipulation, check out my video on liquidity, check out my video on imbalances, and also check out my video on identifying areas of supply and demand. Right? Let me delete everything. Let's move on. So same thing also happened here where this is Friday, ended up in consolidation, right? This Friday ended up taking liquidity from Wednesday's high, right? Monday, you have this induction, right? When people see this, right, they think it's going to continue to the downside, right? But what ends up happening is that on Wednesday, the market takes another turn. You get what I mean? So now you have this W movement. The market comes back to retest for an order block. And what happens after that? We have a continuation of the uptrend, right? So we had this induction, we had this reversal over here, and then we have a new trend, right? Yeah, this is a perfect textbook example. So we got into this week over here with this consolidation over here. I just want to note it. Broke out of that consolidation. The market is making higher highs. And in Thursday, we had this midweek reversal, right? And then the market changed direction. So like I said, you won't see perfect examples from it, but with additional high time frame confluences and also having this idea in mind will help you better understand the phase of the market that you're in the market. Also, I want us to go back. The cycle does not necessarily have to start on Monday, and it does not necessarily have to last up to 5 days. It can literally end within 3 days. You just have to know the phases that you're in, all right? So after you've seen that induction, which I believe we'll talk about the induction theory at a later stage, right? If you've identified that induction, aka accumulation or distribution, you'll be able to identify areas of potential liquidity. If you've seen that the market has taken out that liquidity, it will help you understand or place yourself better when you are entering into that reversal. And as soon as you jump into the reversal, there's that true trend, right? And then you can take your profit at the next area of liquidity. But yes, this is an overview. Obviously, there's more detail, there's more that goes into this theory, right? But for now, that's all that I need you guys to understand. Hope this made sense. If you have any questions, feel free to engage with me in the comment section. And I'll see you guys in the next video. For now,